Now, even though these days a lot of the ultra high yielders like take WPAY, the Roundtail Weekly Pay Universe ETF, an ETF that's actually grown since inception and pays income weekly to the tune of like 60, 70, 80% yield, seem to be too good to be true. I mean, some of these ETFs have actually proven themselves to pay high income, offer exposure to high beta underlines, and sort of do their thing. In this video, we're going to dig into WPAY, the Weekly Pay Universe ETF specifically. Like I mentioned, an ETF that has around a 60% yield as of right now, and figure out if this ETF is truly a money printing machine or just another soon-to-be failure high income ETF that we should stay away from. Either way, if this sort of thing interests you at all, make sure to stick around, drop a like down below, and let's get right into it. My A to Z dividend investing ebook has already helped countless dividend investors get started with their journey. And my custom dividend tracker, the one I use all the time on my videos, has also helped so many investors stay organized and has actually helped them see their dividend income grow. Well, today I have something even better for you guys. When you click the first link down below in my description and you grab my A to Z dividend investing ebook, today you're not only going to get the ebook, but you're also going to be getting the custom dividend tracker, which you can use to track your own dividend income ongoingly, get direct access to my personal email where you guys can email me any questions regarding dividend investing. You're also going to receive a link to view all of my holdings inside my 7-figure dividend portfolio and see all the positions I add and take away ongoingly. And you're going to get for absolutely free my brand new high yield dividend investing ebook, where I show you the power of maximizing some of these high yielding ETFs and teach you everything there is to know about that also. This is going to be your one shot to grab everything inside of one single bundle, but you got to move quick because I'm not going to offer this for long. Now, with all that, let's get back into the video. So I came across this article from Dividend Collection Agency. It says WPAY, your portfolio's new weekly paying machine, or another dud. It says the Roundtail Weekly Pay Universe ETF offers unique weekly distributions and a fund of fund structure, appealing to income-focused investors. WPAY's diversified ETF holdings and monthly rebalance helps to mitigate volatility, but leverage increases the risk of NAV erosion and amplified losses. With only a month of operating history, the fund has outperformed peers like the S&P in total returns while maintaining a lower expense ratio. Despite active distributions and tax advantages, I rate WPAY a hold due to its short track record and potential risks in volatile markets, which I think is definitely fair. It says the idea of getting paid on a weekly basis instead of monthly, like most covered call funds, is definitely an interesting idea. With the recent launch of the Roundtail's Weekly Pay WPAY, the fund definitely caught my attention. I've been looking to build an all-income portfolio from scratch consisting of mostly covered call ETFs, although I haven't pulled the trigger yet. WPAY is definitely one I'm keeping on the watch list. But due to its short operating history, roughly a month, smaller size, and the potential to see NAV erosion, I rate them a hold and think investors should tread carefully if considering WPAY as an investment. It says unique strategy. Besides their weekly distributions, WPAY's unique strategy is likely something that has drawn income-focused investors. The ETF is a fund of funds, meaning that they hold the entire weekly paying universe of ETFs inside the portfolio. But what about distributions? It says so far distributions have been relatively stable. At their current distribution rate of over 70%, which actually as of right now it's around 60%, is particularly attractive for retirees or income-oriented investors. Additionally, these are classified as return of capital, meaning taxes are deferred until the time of sale or when your cost basis reaches zero. As a result, these can be held inside of a taxable account, making them appealing for younger investors, not the traditional retirement age investors. This is true because they are not able to withdraw from a tax advantage account. So far, WPAY's distributions paid an average of around 55% ROC, and the rest is net investment income. Net investment income works a bit differently, as this subjects you to an additional 3.8% tax depending on your filing status and your brackets. Now, some of the risks of WPAY, it says, as a weekly paying fund that uses leverage, WPAY is at risk of experiencing NAV erosion and underperforming over the long term. So far, the distributions have remained relatively steady, and the downside has been minimal. If the market experiences a major correction or crash, this would amplify the downside. Additionally, if NAV erodes over time, distributions are likely to be lower going forward, making the fund less appealing. As a result, this could lead to outflows of the fund. So lastly, it says the jury is still out on the Roundtail Weekly Paying ETF since it's only been trading for around a month. So far, there are minimal downside and higher total returns compared to the markets. Additionally, their monthly rebalancing and use of leverage enhances their appeal for income-focused investors. Contrary, this also subjects the fund to higher downside. For investors looking for passive income, WPAY's short track record may be a turnoff, but it's worth at least putting on your watch list. Now, the way that I look at WPAY is pretty much the same way I look at a lot of these ultra high yielders that do offer exposure to extremely volatile underlines. I think names like WPAY and others that offer, let's say, a 50, 60, 70, 80% distribution rate can definitely have a place in a long-term portfolio, but you have to buy in at the right time. You have to hold for the right amount of time. And of course, ETFs like this one would never make up my personal entire portfolio. Now, don't get me wrong, inside of my long-term dividend portfolio, I do hold on to certain names that do offer a much higher yield than the general market. But again, as far as ultra high yielders, names that offer, let's say 30, 40, 50, 80%, I just think those names are a bit too risky because again of the underlines they offer exposure to. But regardless of what you want to say about WPAY, since it's been trading for just around a month or so, the ETF is up around 16-17% as far as total return goes, which annualized out, that's a 156% total return per year. Now for reference, over the same time frame, the SPY is up around 7% total return, which also is very, very impressive over this short time frame. But WPAY is up over double that. All to say, like the writer said, the ETF is definitely worth having on your watch list and definitely watching very closely on what happens to this ETF as far as its price performance and of course its distributions during the next volatility in the market. But before I go, I do have a question for you guys down below when it comes to WPAY, the weekly pay universe ETF by Roundhill. Do you currently hold on to it? And if not, what is your favorite weekly pay and dividend ETF across the market as of right now? Let us know in the comments down below. If you enjoyed this video, make sure to please drop a like on it, subscribe, and I'll see you in the next one. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.